Do you ever wonder where the headlines come from when you read real estate articles in the news or online? Every month, each real estate board releases statistics on the number of sales and the average sale prices for properties across their area. So my name's Annalie Rice, and I'm in Ottawa, Ontario, Canada, and this is a presentation to explain a little bit about the statistics that drive the headlines that we get very stressed out about and that the media loves to share. So in this video, I'm going to explain a little bit about what you're seeing in the statistics and what actually is happening in the market when you look at it from a different perspective. So first off, on the right-hand side, you see the example of the statistics that come out each month. So this is pulled from the information that I list every month, and I share it on my social media every single month. And this was the January statistics, so it came out beginning of February. So as you see this, it's got the number of sales and the average sale prices, and you've got a lot of big red negative numbers talking about the number of sales is down by a huge amount, 35% in January, and the average sale price is down 12% or 8% for different things. So residential in this case is anything that is freehold. So that could be detached homes, that could be a townhome, and condominiums, that could be townhome condominiums, stacked condominiums, as well as apartments, of course. So there's big variances, but from these stats that are released every single month, at the beginning of the month, you get the news headlines that say like the market's down by 35% or that sales are in a free fall, the market's crashing. And it puts a lot of fear into people about maybe getting out and selling or getting out and buying. They think that, you know, they've lost 12% or 35%. And without getting into the details, people don't really understand, and they just take those headlines as they come. So here I'm going to share a little bit. So first off, what do they mean by average sales price? So the average price of all sales in the same property category. So as I mentioned on the slide previous, it's residential. That includes detached homes, that includes townhomes, semi-detached. That also includes properties that are mobile or modular homes on leased land. Very lower price point than, say, a detached home. And then the other thing is you could have condominiums. So the average sale price is an average of all of those. So it doesn't mean that your house is worth that. It doesn't mean that every house that you purchase is going to be that. You could have millions of dollars of difference of the average sale price to what you plan to purchase or sell. So I'm covering it up. The average sale price for 2022 was $1 million, and then $7,676, and in February 2023, $834,000 and change. So negative 17.2. That'll be a big red negative number for. Actually, it won't be that one because it's also going to have the freehold lumped into it. But if it was detached, it would say negative 17%, and that would look really bad and make people think that their house is declining in value. But if you look at the month to month, so comparing January 2023 to February 2023, we see that the prices actually went up, and my screen is covered up probably there, but it actually increased by over 5.5% month on month. So if you look at the chart, you see that the prices have been quite steady for the last 7 months or so. There was a decline from the peak in February 2022, but the prices have stabilized, and in the last 2 months they've been increasing for detached homes. Let's move on to the freehold townhomes, which is another one of the larger market sectors. For freehold homes, we see that year on year, so February 2022 to 2023, we have a 17.6 year on year decline in prices. And even month to month, this month was down 1.9% from January. But if you look at the chart, January was a tiny little bump up from the 3 months prior. And this month looks pretty similar to the last 3 months before January. Again, prices are pretty flat for the last 7 months, in this case, 7-8 months. And finally, let's move to the condominiums. So this is, again, all condominiums. You've got luxury, condominiums, you've got, 50-year-old townhome, condo townhomes. You've got a very wide variety, and because there are a lot fewer sales in the condominium market, the price volatility is very much more obvious. Like you can see big jumps and drops month to month. So as a trend, we've got 12.4 year on year. So yes, prices are down a little bit from the peak, which was kind of January to April 2022, and month to month, it's plus 0.9%. So again, it could be up next month, it could be down next month, it could be back up a little bit. Depends on what's selling. But it's nothing to be worried about. 12% down. It's not month to month. It's trending very steady. The other stat that you get a lot, and this one the last few months, they've been using it as the big headline, is sales volume. They'll talk about the 35% down or 40% down, but it's not the sales prices, it's the sales volume. How many homes have sold in a specific period of time compared to that period of time the year before or month to month. So what we'll see is February 2022 to February 2023. And the next table here shows you what those are. So freehold detached, I've split it up into those three different categories. So freehold detached is down 37%, townhomes down 47%, condominiums down 34%, for overall of negative 40% when you're comparing February 2022 to February 2023. Sounds scary, right? But let's look at what February 2022 looked like. So this chart here, again, I'm covering it up, apologize. Yeah, you compare February 2023 to February 2022, 40% down, it looks very drastic. But if you look back a few more years before that, let's ignore the 2 years of pandemic and let's look back prior to that. The sales volume was climbing slowly because the population is growing, the number of houses are growing. And then in 2020 rates were relatively low and it was a busy February. But 2021 and 2022 were record years and the interest rates were at a record low, near zero. And people had a pent-up demand for purchasing properties and moving and finding something outside of the city or finding stuff outside of Toronto. A lot of people moved to Ottawa from Toronto or other larger areas. So if we look at 2023 sales volume for February, is it slow? Yes. Is it slower than the 10-year average? Yes, it's down 20% if you include those pandemic years that were record highs. If we take away those two pandemic years, it's a negative 14%. Sorry, it's covering it up. Negative 14%, which is still down, but interest rates are at 5% or higher, and people are tentative. People are worried about high-priced homes that have only dropped by 12%, say, but their interest rates have gone up by 4 times, which is a lot of money month to month, and we're into sort of a recession. So people want to know if the interest rates are going to continue climbing. On that note, we do have the Bank of Canada is going to be announcing their next rate hike or hold next week, March 6th, I believe it is. And so as we move into March here, people are going to start listing their homes. People do need to sell. And I think the sentiment of the buyers is really going to be affected by those rates. And if the rates continue to climb, which at this point wasn't expected to, if the overnight lending rate announced by the government is climbing, then maybe people will still hold off and the sales volume will stay slower throughout the spring. But if they hold the rates, then we may be looking at a lot more buyers coming back to the market and hopefully a lot more sellers. I'm just going to switch the slide here. And ultimately, the number of homes that sell next month is going to be really dependent on the amount of supply and the amount of demand. So the number of sellers that come back to the market. And also, that will dictate the prices. If there's a big flood of supply and still the buyers are a little bit hesitant, then you may end up with prices dropping a little bit more. If the rates do climb again, maybe people will still, the buyers will stay away, and then there's a flood of new properties, and the prices could drop. Now, if fewer people decide to put their houses on the market and the buyers all come back full force because there's no rate increase, you could end up with a lot more demand than there is product, and you could end up with prices continuing to rise. As we saw from January to February, the number of houses on the market was very low, and you could end up with more people buying, not enough houses on the market, and the prices in turn start to rise a little bit, which will have its limits, because with lending being so expensive, people will reach a limit a lot quicker and won't be able to sustain those increases very far. So again, my name is Annalie Rice, and I hope that this video has been a little bit helpful to help you understand what the stats mean, how they interpret into headlines. And if you want to get in touch or find out a little bit about your situation or look for buying or selling, my contact information is there. You can reach me at email, phone, or follow me on YouTube. I do weekly update stat videos for the Ottawa real estate market. Hope you have a great day.